Warren Buffett's advice you're still ignoring. Warren Buffett, the Oracle of Omaha, is one of the most successful investors of all time, with a net worth that consistently ranks him among the wealthiest people on earth. For decades, he has shared his wisdom through shareholder letters, interviews, and speeches, offering simple yet powerful advice on money, business, and life. Yet despite the accessibility of his insights, many people continue to ignore them. In a world obsessed with quick profits, speculation, and flashy lifestyles, Buffett's principles often seem too boring or too patient for the average person. But those very qualities, discipline, consistency, and common sense, are what made him a legend. Let's dive into some of Buffett's most important advice that people are still ignoring today and explore why following it could change your financial future. Live below your means. One of Buffett's most famous pieces of advice is to spend less than you earn. While that sounds obvious, it's easier said than done in a society driven by consumerism, credit cards, and social media comparison. Buffett himself has lived in the same modest Omaha home since 1958, despite having the wealth to buy a mansion in every city on earth. Most people, however, increase their spending as soon as their income rises. The new job means a bigger car, the promotion means a bigger house, and the raise means more luxury trips. Buffett believes that this lifestyle inflation keeps people poor, no matter how much they make. The key is to avoid debt, save aggressively, and invest the difference. If you ignore this advice, you might find yourself in the all-too-common cycle of working harder only to keep up with expenses. Buffett shows us that wealth isn't about what you make, it's about what you keep. Avoid debt. Like the plague. Buffett has always warned against unnecessary debt, especially high-interest credit card debt. He once said, "If you're smart, you're going to make a lot of money without borrowing." Yet millions of people still rely on credit cards for daily living, paying interest rates of 20% or more, far higher than any realistic investment return. Even worse, many people take out loans to buy things that lose value, like cars or gadgets, rather than investing in assets that grow. Buffett argues that debt destroys not only your wealth but also your peace of mind. Financial freedom comes from owning your time, not owing it to creditors. Still, people continue to ignore this advice, convincing themselves that good debt, or just a little debt, is manageable. But as Buffett's life demonstrates, patience and saving beat borrowing every single time. Invest for the long term. Another timeless Buffett principle is to buy and hold quality investments. He is famous for saying, "Our favorite holding period is forever." Instead of chasing trends or trying to time the market, Buffett recommends investing in companies with strong fundamentals, trustworthy management, and long-term growth potential. Yet most people today still fall into the trap of speculation. Day trading apps, meme stocks, cryptocurrency hype, and overnight millionaire stories tempt investors into gambling with their money. Buffett, on the other hand, stays calm when markets panic and keeps investing steadily. History proves him right. Patient investors who ignore short-term noise and focus on long-term value tend to build real wealth. Those who ignore his advice often end up with emotional stress, losses, and regret. Keep things simple. Buffett has often said, "Never invest in a business you cannot understand." His approach is surprisingly straightforward. He avoids complex investments, doesn't chase fads, and focuses only on businesses he understands deeply, like Coca-Cola, Apple, or American Express. Most people, however, prefer complexity. They chase the newest financial products, jump into speculative assets, or believe they're missing out if they don't follow the latest trend. The truth is that simplicity often outperforms complexity in investing. Buffett built billions by sticking to simple principles, but people ignore this advice because they think wealth requires complicated strategies. In reality, understanding your investments, and sticking to them, works far better than gambling on things you barely understand. Value time over money. Perhaps one of Buffett's most overlooked lessons is that time is the most valuable asset. While he's obsessed with maximizing returns on money, he's even more careful about how he spends his time. He avoids unnecessary meetings, doesn't overbook his calendar, and spends much of his day reading and thinking. In contrast, most people trade time for money endlessly. They fill their schedules, chase paychecks, and burn themselves out without realizing that wealth should buy freedom, not busyness. Buffett's life proves that success is not about working endlessly but about working smart and prioritizing time for what matters. Ignoring this advice leads to a life where you might end up rich but never truly free. Surround yourself with the right people. Buffett has often credited his success not just to his strategies but also to the people around him. His longtime partnership with Charlie Munger is legendary, and he frequently stresses the importance of surrounding yourself with people who are better, smarter, and more ethical than you. Unfortunately, many people ignore this advice and instead surround themselves with toxic influences, friends who encourage overspending, colleagues who promote shortcuts, or mentors who push reckless risk-taking. The people you associate with shape your mindset and habits more than you realize. Buffett's wisdom here is clear. Choose carefully, because your network determines your net worth. Be patient. Compounding takes time. Buffett's fortune didn't come overnight. In fact, more than 90% of his wealth was earned after the age of 60, thanks to the power of compounding. He describes compounding as the eighth wonder of the world, where small, consistent investments grow into massive wealth over decades. Yet this is the advice people find hardest to follow. In a world of instant gratification, most investors can't wait for years, let alone decades, to see results. They want quick returns, viral success, or lottery-like wins. Buffett, on the other hand, proves that slow and steady wins the race. Ignoring compounding is like uprooting a seed every week to check if it's growing. Those who stay patient eventually harvest the rewards, while those who don't end up frustrated and broke. Final thoughts. Stop ignoring the obvious. Warren Buffett's advice isn't flashy, complicated, or mysterious. It's practical wisdom rooted in discipline, patience, and common sense. Spend less than you earn. Avoid debt. Invest for the long term. Keep things simple. Value time. Surround yourself with the right people. Be patient. Yet many still ignore it because it feels too slow in a fast-paced world. But maybe that's the point. What's easy to ignore is often what works best. Buffett himself once said, "What's needed is a sound intellectual framework for making decisions and the ability to keep emotions from corroding that framework." The framework is already there. The real question is whether you'll finally start listening, or keep ignoring the timeless advice of the greatest investor of our time. Warren Buffett's wisdom may sound simple, but that's exactly why it works. The question is, are you ready to finally start listening? If you found this video valuable, make sure to hit that like button, subscribe to the channel, and turn on notifications so you never miss out on more insights like this. And I'd love to hear from you. What piece of Buffett's advice do you think people ignore the most? Drop your thoughts in the comments below. Thanks for watching, and I'll see you in the next one.